I love ethnicity, so I'm trying to learn.
Yeah.
I know little, like I had a friend, I said, oh, I can't even speak Chinese.
Do I need two of these?
I don't even know how to say hello.
No, I know you really study your stuff.
So,
I said I know
my
you really
Arabic
study
buddies,
your stuff. So
Well, yeah.
Oh yeah.
And what happens is, when we lay stuff over from one meeting to the
so I
next,
started speaking to my Iraqi.
I have the notes from the previous meeting, and then I maybe lose track of them.
There's a lot of different.
And it's like, okay,
Right.
yeah.
Oh, there is.
Indians.
What was it I was going to do here? And
Ethics is that now.
who is?
I got a friend of mine,
You email me.
Yeah,
Yep, it is.
been working on that deal I got going.
it's that date.
And,
I don't think they have the time on the Wayne County website.
pretty nice guy.
But I've been telling people, because I have, a friend or two out there, just one or two
Indian.
that are interested in this. And
Well,
like,
I don't.
okay, as soon as I know, I'm going to post it. Yeah.
We say namaste.
Oh, Namaste. I've heard that. Namaste speak with a number of languages. Namaste. Oh,
This is Commissioner Dodd.
Hi,
Nice
nice
meeting
to
you.
meet you.
so I know how to say Namaste.
Yeah.
Thank you very much.
Thank you.
You probably don't know.
No, I have no idea who this is.
How are you?
How you doing?
Good to see you.
Nice to see you again.
How are you?
Good, good. You got something on the agenda today?
Oh,
Yeah, we have the recommendation.
yeah, well, I got to get them all here. She is late, Irma, and Diane's not here. Oops.
So fast, and it's 2 years.
But you guys don't have limitations on yours like we do.
Your friend.
They don't have it on yours. Is it 8?
Yours is 8. Ours
Down here.
That's good.
I'll take one.
You can hire who you want.
Thank you.
You hire the best person. Well, anyhow,
Thank you.
Good to see you.
Tell everybody I
We
could-
miss you.
tell her, I miss you guys too. Tell everybody at the airport I said hello.
All right, we'll get started. You ready? Committee on Audit, come to order. Mr. Clerk, roll call, please.
Commissioner Webb. Commissioner Killeen.
Yep.
Commissioner Clark Coleman.
Here.
Commissioner Dodd.
Here.
Commissioner Basham.
Here.
Chairman, you have a quorum present.
Okay. And everybody's got their cell phones turned off and all that kind of stuff? Okay. Next item, Mr. Clerk.
Next item B, approval of the May 8th, 2019 meeting minutes.
Move approval, Mr. Chair. Is there support?
Support.
There's moved and supported. Is there any discussion? All those in favor?
Aye.
All those opposed? Ayes have it. Next item, Mr. Clerk.
Next item C, unfinished business. There is none. I'm sorry. Next item, we're moving to, per the recommendation of the Auditor General, to item D4, approval of the Wayne County Auditor General's recommendation to engage Platinum and Moran as the external auditor.
Okay, we're not going to do an order today, but I would like to introduce the Auditor General. If she could introduce herself and her staff and her guests, please.
Marcy Coro, Auditor General, and we do have a representative from the airport with us today. If you'd join us at the table and introduce himself.
Hello, good morning. My name is Istakar Rahman. I'm the Vice President of Internal Audit at the Wayne County Airport Authority.
Welcome. Ms. Gore, please.
What you have before you today is, according to the Michigan Public Act 90 of 2002, the Audit Committee at the Airport Authority, every 2 years per the Act, has to recommend 3 independent certified public accounting firms that are qualified to perform the annual external audit to the Wayne County Commission. The Act provides that the Wayne County Commission is the one that then selects the external audit firm to perform the external audit. If the Commission doesn't act within 30 days, then the selection goes back to the Airport Authority. We received this from the Chair of the Commission last Tuesday, so we wanted to do a quick turnaround on it so that we could meet the 30-day time frame. If we had waited till the next Audit Committee, we weren't sure if we'd make the 30 days. So that's why you have it before you today.
All right.
The authority is submitted to the chair, and then she provided to our office the 3 independent public accounting firms that the evaluation committee had selected. And they arrived at the 3 independent accounting firms. The authority had solicited 1,294 firms. They received 5 proposals. and 2 proposals were deemed non-responsive. The proposals were then evaluated by the evaluation committee in accordance with the authority's procurement and contracting ordinance. The evaluation criteria was based on experience and qualifications, work plan and timeline, and proposed fees. And in your letter that you have on the last page of the appendix is the tabulation of the scores from the evaluation committee. And based on this information, then we went through what the committee had proposed, and then we went through and we evaluated each of the 3 proposals we received. It was a limited review of the proposals because of the time frame. And based on our evaluation of the proposals and the work done by the airport's evaluation committee, we recommend Plan Moran as the external auditors for the airport. And if you will notice on the letter, the last page, based on the evaluation committee by the airports committee, Plan Moran did receive the highest number of points as far as the experience, qualifications, work plan, timeline, and proposed fee, and they did have the lowest cost. So that's what we're recommending today.
Having said that,
I move approval.
Support.
so it's been moved and supported. Any discussion? All those in favor?
Aye.
All those opposed? The ayes have it. Next item.
Can I just add a comment?
Oh, sure.
Sure. I just wanted to thank the Airport Authority for providing us the information as timely as they did so that we could do our analysis, because we knew there was a quick turnaround and we wanted to get it done within the 30 days. So thank you.
Welcome, and I would like to thank the Auditor General's office and all of you here for turning around so quickly because of the 30-day deadline. And thanks a lot.
Well, thank you for the good work you do.
Thank you.
What is your title again?
I'm VP of Internal Audit.
Oh, okay, so you got it, huh? Weren't you
I
the
was doing CFO role for a little while when we had the
CFO?
transition.
Okay.
Yeah.
So is there a CFO
Interim
now?
CFO. Yes, we have one.
And what's their name?
Amber Hunt.
Oh, okay, all right, okay.
Okay, next item, Mr. Clerk.
Moving to item C4, forwarding a copy of the single audit report for the fiscal year ending September 30th, 2018.
Now, Ms. Cora, we were going to move this around a little bit, so.
That's the one we want. Yep.
Okay.
And we have guests from the Land Bank and Matthew Dubay from Management and Budget, if they could join us at the table, and Shantika also, because this is dealing with a single audit.
Sure.
If you'll please excuse my voice today, I'm dealing with something for 2 weeks.
You sing in baritone?
No, I'm good. Thank you.
Matthew Dubay, interim CFO.
Daniel Rosenbaum, Executive Director of the Wayne County Land Bank.
Shantika Ballar, Director of Grants and Contracts.
We had one finding that was left from the single audit, was on page, I don't know if everybody has their single audits with them. If not, I have a couple copies of it. This was finding 2018-005. This was the one finding that was related to the land bank. We had delayed this one so that Mr. Rosenbaum could attend the meeting.
For the big binder.
Nope, it's a single audit. Looks like this, federal awards.
This? Oh, yeah, I think it's.
Yes, that's it.
Oh, it's in the packet?
C4.
There's also C4.
Okay.
C4.
He thinks he did it.
C4, and C4 is usually pretty dangerous.
Okay. So the condition on this finding is that Land Bank did not have sufficient comprehensive procedures and controls in place to complete its accounting and financial reporting function, which should include a review function that would prevent and detect misstatements. During the audit, adjustments to the accounting records were required in order to correctly state the Land Bank's financial statement at year end. Additionally, other entries were identified during the audit that were not recorded by management. Land Bank was unable to provide sufficient records for various material financial statement balances.
Would somebody from the Land Bank, would you like to respond?
Actually, if I may be
Sure, Matthew.
allowed to start
Sure.
the conversation on this item. If we remember from a year ago, when we were discussing the land bank, as the land bank was basically dormant for a period of time, we revived the land bank. part of that process is rebuilding its internal controls, rebuilding its processes, its accounting structure. We're basically almost starting from scratch. And so in 2017, if you'll remember, there were very significant findings related to the land bank that Plant Moran brought forward. We addressed a lot of them working with our, we have an M&B person that works directly with the land bank. Actually, we have two now. Part of the dealing is in trying to correct the 2017 finding is we doubled the amount of personnel that works with all the component units. And I think we made some pretty good strides, but where we came up short was specifically in inventory accounting and inventory management records, which I think really led to the finding from Plant Moran. And so Daniel and Wanda Taylor have spent, I don't know how many hours, but a lot of hours going through how to account for inventory and doing such a, and recording transactions in such a way that the auditors can effectively audit those transactions. And so I think that although we are, substantially through the 2019 fiscal year, so we may still see some findings, I'm hoping that the land bank statements for the fiscal year 19 will have a clean opinion, even though there may be findings associated with them. But I think we've cleaned up a lot of the underlying root cause issues, and I'll let Daniel maybe add his perspective to it. But I think it's not 100%, but it's certainly a big improvement from just from a year ago.
So just to sort of cap from a micro point of view, what you said is you agree with the findings and you're in a process of dealing with the findings.
Yes, we began actually the corrective action plan during the audit when the auditors started bringing up the what they saw as an issue with the record keeping and the accounting support for the transactions. When we dug deeper into that, we saw basically what they were seeing, and we started immediately working towards correcting that in situ and not waiting for them to give us a finding. We weren't able to correct it to a level where they were comfortable by the time we had to issue financial statements. And then we continued with that process afterwards to continue to make improvements to the process.
Thank you. Please proceed.
Great. So I will echo and agree with everything said thus far. To give a quick rundown, I'll talk first a little bit narrower and then a little bit broader. There were three main concerns on the inventory front that the auditors identified. The first, and these are discussed in the letter that we provide. The first, they recommended that we conduct inventory true-ups more frequently. So we had been doing those at year-end. They recommended once a month ever since, to Mr. Dubé's point, ever since they asked us to update the frequency or upgrade the frequency, we've been doing monthly true-ups, and we're going to continue doing that. The number two concern was the valuation. We had discussed with them valuating all of our property at $250. This was last year during the prior audit. Now that they have a better sense of our inventory, they think that there's times that we need to valuate property a little bit differently. What we put together was a valuation procedure that's going to guide how we valuate property going forward, and we implemented it about 6 months ago. So that was concern number two. And then concern number three is similar to number one. We were not doing a monthly reconciliation process of transactions. They recommend that we do that, and we are. So those are the three main concerns and recommendations at a slightly narrower level, all of which we are doing and will continue to do because we agree with the auditors that they make a lot of sense. The slightly broader point, and I think gets to the general sort of inventory question, when we restarted the land bank, revived the land bank in Matthew's terminology, there were, on the inventory front, there's really three different forms of redundancies that we're looking at today, and we have put them into place one at a time. So first, when we revived or started the land bank, we needed to do external inventory reporting. So we had to file property transfer affidavits. We had to record deeds. We had to do a lot of cleanup work to ensure external reporting with the Register of Deeds office, with the state of Michigan, with the county, things that needed to get done by law. So that was number one on the inventory front, was the external. Number two, we had the internal electronic redundancy. So now every time we record something with Register of Deeds or file a property transfer affidavit, we also are making an update in an electronic system that we monitor every day. So that was our internal redundancy. And talking with the auditors, what we decided to make to be really, really thorough and to ensure that everything they ask we can really show very clean and clear and immediate answers to, was the third level, which is now our internal non-electronic redundancy. So every time something happens with inventory, we're going to do that external reporting or filing. We're going to update our internal electronic system, and we also have this internal form and filing and internal process outside of our electronic system that we're doing as well. So this is our, in large part, our inventory processing policy. And this policy sets forth everything we do whenever anything happens with our inventory.
Okay, then let me ask you, why were you unable to provide the number of right of first refusal properties currently held in inventory at year end? And then again, how do you plan on to correct this?
So we did provide that number. At year end, on September 30th, most of the right of refusal properties were not held by the land bank for more than a few days. The only ones we held for more than 48 hours were properties where we were performing a quiet title action before closing, and that quiet title action took a couple months, and it in fact straddled year end. It started in September and it ended, I believe, in November. So at year end we held, I believe it was 42 right of refusal properties, and we did provide that number. Those were the properties pending for quiet title.
So you're saying that the sales of foreclosed properties, were they recorded at the gross sales price?
So they were recorded, they were not individually, if I understand the question, they were not individually recorded. They were done through a reconciliation process that we're now going to be doing more frequently.
But will you be recording them at like the gross sales price, so when you do get an audit that A is A and B is B?
Yeah, well, so that, I guess that's more to our valuation procedure, but if a property that comes, it depends how the property comes to us. So sometimes we will record a property at the sale price. Sometimes we evaluate a property somewhat differently. But in general, for a property like that you're describing, yes, it would be.
So you would be doing that?
Yeah.
Thank you. Okay. Commissioner Webb.
Thank you, Mr. Chair. To that point, on that same thought about recording the gross sales price. So, if someone forecloses on a property, and I guess this is all about valuation, and it's coming into your inventory, wouldn't you value it at that time? I'm just a process question. Don't you put a value on what that property is? Okay, so then when you actually sell the property, then don't you record what you sold the property for, so people can see, what it was valued at and what it was sold at? It would even be good to know is why did they lose it? Like if they lost it for tax foreclosure and they owed $5,000 in taxes on it, and it was valued at $100,000. And you sold it at 120, I would think you would keep track of all of that. You do, don't you?
So, and I'll give a quick answer and I'll pass it over. The vast majority of our inventory, and by that I mean 98%, 99%, is property that was offered to the local community for free, and the local community said, we don't want it. They passed on it. So, from a valuation, this is a conversation we've had with the external auditors. From a valuation perspective, we think that when a property comes to us, 99% of the time, its value is effectively zero. Now, when we discussed this with them, they said, we understand that, but you can't value something zero. So we agreed that a property that comes through that process, that goes through the foreclosure process, gets rejected for free by the community, and then comes to us after that, we agreed that those would come in valued at 250, which we think is sort of a slightly inflated number, but that was the closest that we could give an accounting metric for. Now, when we sell that property, yes, we do record the transaction for both accounting purposes, for legal purposes, and for other reporting purposes.
And
but when it comes in, we value it at 250.
And to that point, Ms. Cora?
To that point, the properties that Daniel's talking about right now, they're being valued at $250. These are ones that did not sell at either auction.
Correct.
And they went to the community, they didn't want them, and so they ended up, treasurer transferred them to the land bank.
Correct. So these are properties where honestly to be really, really, I don't know if it's more technical or less technical, these are properties where we actually think the value is below zero because we cut the grass, but they were rejected for free by the locals. So the across the board, we see 250 as sort of a clean, clear, explainable low number because our side lot pricing starts at 250. So we say, well, if we're marketing these at 250, it's fair to valuate them at 250. Most large land banks do not have a kind of a general accepted accounting principles valuation process because of the nature and extent of inventory that they own. So this is our attempt to say we're going to try to have that process, and this valuation procedure is our attempt to say there are going to be some deviations. There are going to be some properties that come through our ownership that should be valuated at more than 250. We want to be able to spot those, identify those, and valuate them correctly.
That was my next question was, I can't believe that you don't get any property that's ever worth anything. So all the people that lose their houses for tax foreclosure, those never make it to you because they either get sold at auction through the treasurer's office, somebody either, right, or the whole right of first refusal thing, like that program that they did, the action before auction thing. That would happen before it would get to you. Any of that. Right?
So if it comes to us through a different process, our procedures would valuate it higher than 250. So if it comes to us instead of from the treasurer filing foreclosure, if it's a property that the county transfers to us, we would valuate it differently. But the vast majority of our inventory is post-foreclosure, honestly vacant residential parcels that the communities rejected for free.
Okay,
that's the vast majority. But if it's not in that vast majority, we do valuate it differently.
Okay, so like when we have buildings that we're selling that are worth millions and end up in your hands, what is that? Do you have an established process to account for those?
That's treated differently.
And what is that? What does that look like? And then I'm going to ask our auditor if you're comfortable with it.
Mm-hmm. So it would be then it's valuated based on because if it's coming from the county directly, it's coming pursuant to a purchase and development agreement where there is an already negotiated purchase price. So the property is then valuated at the negotiated purchase price. So when it comes in, we valuate it at that number. We don't valuate it at 250.
I'd just like to see what that process looks like, and maybe it's for another discussion, but I'd just like to see what that process looks like from when the county has possession of a property that is valuable, and somehow we transfer it to the land bank, and then you sell it to alleviate us of certain other financial obligations we would have if we didn't go through the land bank, because they always have reasons for going through the land bank, and I'm not in real estate, so I don't understand what all of those reasons are, but I would like to know more about that, and I'd like to see how that's documented, and how, if the auditor feels comfortable, our auditor feels comfortable with how those sales are documented. Are there any instances, Marcy, that you know of that we have gone through with a couple of these buildings that I know were moved into the land bank?
The Temple building, I believe, is an example.
640 Temple is a perfect example of that. So how'd you handle 640 Temple?
So this is, and I don't mean to fully punt because it was partially before my time, but that on the on the accounting front, that property was not treated like a $250 property. It came in, there was a recording, there was a valuation, the funds were moved accordingly, the filing that had to happen legally, whether recording of deeds or filing of PTAs, all that occurred. The property was treated sort of like a standard real estate transaction. And then at closing from land bank to third party, same thing happened again. So my understanding is it went through a standard real estate process, and that's the same thing as with McClaw Steel and 511 Woodward.
Right.
There's somebody who wants to join us at
Yeah.
the table. Sir, if you'd like to join us, you had your hand up? Oh, I thought you were going like this. Oh, you're just excited. Okay, all right, I'm sorry.
All right.
Okay.
Well, before you both go, I'd like to talk to you about that, because I don't know if he wants to go that far and do it, but I want to know how that works.
Well, I think I can provide maybe a higher level explanation than what Daniel, I think he was maybe providing a greater level of technical detail than maybe what you're looking for. So let's say and I'm going to use big round numbers because I don't remember the detailed numbers, but let's say we have a facility that we have found an external purchaser for $5 million, right? We own a parcel of land someplace that has a building and somebody wants to buy it for $5 million. It's a parcel that is owned currently by the county, right? It's not owned by a component unit. It's not owned by somebody else. So we would do the transfer to the land bank. The land bank would record that at $5 million of inventory. They would sell the property for $5 million, which is what the negotiated sale price is. The land bank then would, through the closing process, pay off any closing costs, whether there's title work and like a normal real estate transaction, maybe broker's fees, maybe other things. So out of that $5 million, there may be $200,000 worth of closing costs, right? And so they would record on their books the $4.8 million net sale, and they would show the $5 million of proceeds, a reduction of inventory, the $200,000 worth of costs associated with the closing. That is their recording of the transaction. The county then would show the $4.8 million that the land bank would transfer back to the county. Most of these agreements have the land bank gives the county the net proceeds of the sale. Right? That's what we did with 640 Temple and most of the other facilities. When they go to the land bank, they come back, whatever the net proceeds are. So the difference is if we had sold it, we would get $4.8 million. If they sell it, we get $4.8 million. The difference is that when they sell it, they get a property tax capture that we would not get if we sold it. And so by doing that transfer to the land bank, the county as a whole, including the land bank, now gets a little extra that we would not have gotten otherwise. And on some of these larger real estate transactions, that essentially can offset a significant portion, possibly even more than the closing costs. So ultimately, the land bank is a beneficiary of this process.
I see.
But because they're part of the county, that means we win as well. It's a win-win for everyone involved. The purchaser gets the same property they wanted for the same price that was negotiated. The land bank gets a small property tax capture, and the county still gets all of the money we would have gotten otherwise.
Perfect explanation. Thank you very much.
And
Clear it all up.
To that point, Mr. Abbo.
Actually, thank you, Mr. Chairman, but Matthew answered the question because in all the transactions I've seen, the sale of those properties should be revenue neutral to the land bank, and the only reason it's flowing through the land bank is to get that recapture because of the DDA property. So they're revenue neutral. All the attributes of gain or loss or transaction costs basically are recorded through the general fund or whichever fund is selling the property. Yep. And that's true?
Yes, absolutely, it's true.
But we still go through the exercise, though, of recording it coming into inventory and then going out. But ultimately, agreed, it is, in all of these cases, it's been revenue neutral for the land bank because we're remitting to the county the same sale price we're collecting from the third party.
Okay. So,
Thank you.
well said. Do we, anything further? Commissioner Kleen?
Thank you, Mr. Chair. A lot of terminology here. What is a true up? That keeps coming up in audits, a nice little term of art. What is a true up?
So different systems and processes require true-ups. So this is an example where their inventory accounting system is separate from our regular general ledger accounting system. And so the transactions are recorded in their inventory system, and then every month, the true-up is really the calculation of what came into their inventory, what left their inventory, what was sold, what was maybe disposed of some other way, and so going through that process, we call that a true-up. That is essentially it's not a reconciliation of the account, it's a calculation of what the balance should be and truing up the balance to month end should have been if we had recorded every single transaction in the general ledger. We don't capture every transaction in the general ledger because by the time a lot of the transactions that Daniel's land bank is involved in oftentimes are taken care of in a matter of days. And we don't have full-time accountants working just for the land bank. And so what we do is we get, at the end of the month, we get a detailed listing of all the transactions they were involved in from an inventory standpoint, and therefore then we record that activity in the general ledger. That's a fairly typical way of dealing with small entities within the county where we don't have the ability to record every single transaction because they don't flow through our general ledger system directly.
Does the land bank then have a policy, written procedure on true-ups?
So
and how you're doing that?
Yeah, so we have...
Has the Auditor General seen that written policy or procedure for how you're doing that?
So our inventory processing policy is attached to the letter that we shared, and that talks about how we handle all inventory that moves through the land bank.
And the Auditor General is good with that?
What's this letter? I guess I'm confused.
It's the corrective action letter. If you don't have one, I can get you another copy.
Yeah, that was another thing. People keep referring to this letter that I haven't seen. Anybody else seen it? Auditor hasn't seen it. Who else has seen it? You've seen it. That would be nice. And this is what makes it really difficult with this issue. It's very sensitive around foreclosure issues and buildings and sales. Very sensitive issue out there. And we're going to see more of that in the near future here at the Commission. So trying to, and I think there's been too much in verbal here. I need to see more stuff in writing. Like when you start talking about inventory valuation, and then you say, well, somewhat differently for other properties, what's the policy? I would like to see a flow chart. How do properties come in? What are the different methods that properties get into the land bank from whatever sources? And then if there's different policies on valuation, then explain what the different policies are. If it comes in this way, here's the policy. If it comes in this way, here's the policy. We're going to be seeing this in audits year after year. And in our job of oversight, I just find it very difficult to deal with a verbal explanation here, and I would like to see the Auditor General see that and my fiscal staff see that, so that we can start, really looking at, okay, a better grasp on what's happening and what's really happening in land bank. And I don't think you said, well, this was after they were offered to the locals, but that's the process that the treasurer goes through, right? It's not the land bank that gives right of first refusal to locals.
No, the properties get offered by the treasurer to the locals.
Yeah. So when I heard you say that, it was like it sounded like you were a part of that. But so this is, again, why I want to see how do properties come into the land bank, right? We get these properties, after right of first refusal. I think that would be good to see. Is that something you can, a little flow chart and the policies around valuation is something that's eminently doable?
So the valuation procedures were also attached to this corrective action letter, which we'll share again. So that should be in writing, and that's something that's very simple and easy to share.
Well, you'll have to forgive me. It's hard to talk about a letter I haven't seen.
Absolutely.
And keep referring to a letter I haven't seen.
But
so
it goes.
I'm groping around in the blind here.
Sure. Well, we will make sure that you can get a copy of that today because that's easy to do.
To that point, Mark Ebba's been groping around wanting to get a comment to that
If I
point.
could just ask a question through the chair. Matthew, I mean, my recollection of generally accepted accounting principles says that we value inventory at the lower of cost or market. And Daniel made a reference to we spend money so we have a lower cost. So that becomes an increase in inventory, but then the evaluation of lower cost or market would take it back down at some point in time when you evaluate. I don't understand the $250, nor do I understand why we wouldn't just do that. Whatever our cost is our cost. And if market is lower than that, we take it down. If market is greater than that, we leave it at cost and just accumulate, have a subsidiary record of what each property is and the associated cost based on that generally accepted accounting principles study.
That's the argument that we made with Plant Moran, and they give us a finding for not doing it their way.
But what's their justification for $250?
That there is value in that property when we take possession
But
of
we
it.
haven't paid that value.
No, we have not paid for it. But their argument is that that property has value and that it has to be recorded as an inventory item with value since we are going to be selling it. So we argue that it does not have a value. I know Daniel made that argument, Wanda made that argument, I made that argument. In 2017, they gave us, or 2016 and 2017, they gave us findings for inventory valuation on these properties. And as part of the corrective action plan, we agreed with Plant Moran's process for valuing these properties.
And I guess I'll have to update my understanding of generally accepted accounting principles
Okay.
on that matter.
Commissioner Kleen, are you?
Yeah, thank you, Mr. Chair. Valuation, I appreciate the question that Mr. Abbo just gave. I'm looking at valuation at the other end, too, because you referenced theoretical $5 million sale, right? And so we have some agreement to sell it, and the agreement is $5 million. So we transfer the property into the land bank in order to make the deal happen. As it comes in, it's at $5 million. What occurs to me is, what if the real value of the building is $6 million? And out there in the marketplace, I'm not sure that the sale price is how you do valuations. And so I would, in terms of what? In terms of our process and stuff, it would seem that we would value those at market rates when they come in, not at an already pre-agreed sale price.
Since I've been here, I can't speak to what we did before that, but since I've been here, all the properties that we've sold, we've had appraisals done. I think there was one that we didn't have an appraisal back in 2015 maybe. But since then, we've had appraisals on all these properties, and the appraisals have always come in lower or at the market rate. And so there is no difference to the appraisal in the direction you're saying, where the appraisal is higher than what we can get the building for. If we had a $6 million appraisal, we'd be going out there pushing for a $6 million sales price, if not higher than that. 511, I think the appraisal came in, I want to say like $500,000 or $1 million lower or something like that.
I don't know off the top of my head, but I know it came
But that
in lower.
was a part of the process at arriving at a sales price, right? We start negotiating with someone, and at that point, an appraisal is done, not prior to starting to negotiate.
We have not gone through and had appraisal services for every single property we own. That's true. So when we find someone who has an interest in a property, then we bother to spend the money on the appraisal. We could do appraisals of every property, but within a year, we would probably need to redo them again because market prices change depending on location within the county, depending on other factors.
I'm looking for best practices, Mr. Dubé.
Yes. No, I understand.
And
We got two at that points, Mr. Abbo, and then
Matthew, correct me if I'm wrong, the land bank doesn't negotiate these transactions. That's done by the county.
Yes.
And so the land bank is just a conduit. So
Correct.
this whatever the sale price is, the land bank is just handling the paperwork. The selling price
Correct.
has already been determined. Appraisals have already been obtained. So when we determine that the selling price, it's generally like 640 Temple was done through an auction. Not an auction, but a process. The price has been predetermined, and the transaction just flows through the land bank only to capture that DDA tax of a half of, I don't know, I don't recall, it was
It's 50% of the taxable, of the tax for 5 years.
right, all right.
Yeah, and to that point, Commissioner Webb had a comment.
Thank you, and just to continue on what Mr. Abbo just said, so it's really economic development that's doing that process, not the land bank. So just to the auditor now, when you do an audit on economic development, is that something that you look for? Because all those properties that we sold to Dan Gilbert, where we had an interested buyer and we were supposed to do an appraisal of all those properties that we sold Dan Gilbert, we didn't. We didn't do an independent appraisal of all those properties. He told us what he'd give us for them, and we sold them to him for that. So is that recorded somewhere in an audit? Would that be something? And I know that, I don't even know if the land bank even got involved in that deal, but 640 Temple they did, 511 Woodward they did. So is there any, when you do an audit, do you look to see if independent appraisals of properties for valuations are done?
It would depend on what the objective of the audit was. If the objective of the audit was to do a verification of the appraisal values, the sales, then that would be included. Just depend on the audit.
I'm just going to make a quick suggestion for the record. I'd love to see you do an audit on that. Thank you.
Okay, Commissioner Kleen.
Thank you, Mr. Chair. You referenced your cost for these properties and zero valuations because they're worthless. Where do I see all of those costs that the land bank is, how much they're paying for upkeep of the properties, the mowing, whatever boarding up that needs to be? Where are those costs recorded? Have I seen them?
They are in their financial statements, and they're reflected in the county's financial statements for their activities.
Okay. So I can go get that. And is the same thing true of the tax capture then? That is in the financial statements as well?
Absolutely. That is property tax revenue to the land bank. So you'll see that as a revenue line within the land bank statements, both their separate statements and the county statements.
Okay. Because again, I'm going to reference the great sensitivity around foreclosure issues and people losing homes and all of the other stuff that emerges. So I think I'm going to go back again and say, I think some sort of a flow chart, which I think you said is doable, about how properties get into the land bank, the different methods that they get there, and the different methods of disposal, so that the commission has a better understanding of exactly how these transactions are being done and what the different methods are to get them done. So again, is that something you can get to us?
Sure. Yeah. I mean, we have only a few ways of obtaining property.
I'll wait until you put it down on paper and look at it. This is, again, some complexities here in real estate transactions. I know what I want to see in paper. I don't know if a verbal explanation today will help me do that.
No, certainly. That's easy
and
to do.
especially 4 months from now, if I have a question to go back and go, what the hell did he say at the meeting, and what was that all about? You know, it's I got a leaky sieve, so I need to see some stuff in writing about this. So the policies and procedures around accepting and disposing of property with a nice little flow chart showing the different methods, I think would be very helpful. And I think it would also be very helpful in terms of other elected leaders in the county that can actually understand and speak to this, and so things aren't said out in public that may or may not be accurate about what is taking place. So I think the more everybody knows, the more transparent all county leaders know how things are being moved around in there, I think is ultimately to the good of the public as well.
Ms. Gore.
Thank you, Mr.
Ms.
Chair.
Gore.
Just two comments. One of them regarding the properties that are transferred from the treasurer's office after nobody else wants them over to the land bank. The treasurer does submit about $500,000 a year, I think it is, for the maintenance of those properties. So that treasurer is transferring that. Then the second one, maybe Daniel can talk a little bit about the capturing of the 5 years, 50%, because I think we had a discussion where it's more reliance upon the local communities to submit it, correct? the 5 years, 50%?
Correct, if I understand. So first, to the maintenance, it's just a per parcel allocation, so 500 would require us to have a lot more properties than we have. But it is, I believe it's $200 per parcel. The 550, yes, that's correct. It is reliant on the local communities. So there are local communities that are really on top of it, and then there are local communities that are not submitting that.
So back to Commissioner Kleen.
You say the local communities do the maintenance and we pay for it?
No, those are two separate questions.
Yeah, okay.
The 550 collection, which is set forward under the Tax Reverted Clean Title Act, that is something that by law local communities are obligated to do. Some of them do it in collaboration with us, some of them do it without needing any help, and some of them are not doing it.
Because among the sensitivities out there around all the foreclosure issues and the vacant homes all over my neighborhood, and other communities around the county, how do you verify that the maintenance has actually been done? Because that's another, that's another blight issue in communities, to have a home in the middle of a block where it's not being boarded up, the grass isn't being cut. So what's your process for ensuring that the proper upkeep is being done with this 500,000 grant or whatever?
Sure. So we collect pictures from maintenance contractor. We also do field work ourselves to verify, especially for most of it is just vacant lots, so it's mostly grass cutting. But in particular, if there is a structure, most of those are in Highland Park, and we do verify boarding. If you go out into Highland Park, the structures that we own, that we board, have a specific look. The boards have a certain color. The addresses written on them have a certain look. So we're able to go out and verify everything pretty easily.
Yeah.
You
don't have so many properties that it's like impossible to get to them.
It's not impossible. The other thing is the communities. If the grass is getting a little bit long, we hear it from the communities. If something was boarded, but then a board gets removed and somebody enters the property, we usually hear it very quickly. Actually, even before the communities, we usually hear it from neighbors.
So every one of the communities in Wayne County has a list of the properties you control in their community.
So that's all available on our website, but anytime a community asks for an updated list, we also provide them spreadsheets.
Seems like we would do it routinely. But anyway, thank you, Mr. Chair. That's
Okay.
it.
Anything further? Okay. Can I get a motion?
Move to approve. Support.
Been moved and supported. Any further discussion? All those in favor?
Aye.
All those opposed? Ayes have it. Next item, Mr. Clerk.
What's next? D1. Next item, D1, presentation by Matthew Dubé on the county's independent external auditor, Plant and Moran PLLC.
Okay. Welcome, Matthew, again, and please proceed.
Thank you. The presentation that I have today is a high-level summary of the county's comprehensive annual financial report. I believe that we have provided to each commissioner a printed bound copy now, and I believe the members of the committee actually also received a copy from Plant Moran in a binder. And so I'm going to go through this somewhat quickly because all this has already been provided to you. But I want to just kind of hit some key highlights that I think are helpful. Obviously, 250 pages, it takes a little while to digest. And so I've picked out some highlights that I think are helpful items. Going through the topics that I'm going to cover today, I'll talk a bit about fund balance. Going to talk a little bit about the CAFR itself, our the county's debt. I'm going to skim through, or actually probably skip the 2019 expectations. That's really a budgetary discussion, and we've gone through the 2019 budget. Now we're entering the 2020 budget season, and so I think there's very limited value in that piece, although I included it in as a highlight. If there are questions, certainly I can speak to those or take questions back to Kevin. And then I want to talk about some governmental activities. Oftentimes we talk about the general fund, but we lose sight that the general fund is really about half of what we do. It's certainly the biggest piece. It's half by itself, but there's a whole other half that we oftentimes don't think about. And so the governmental activities gives us a bigger picture, which I think is helpful to look at. At the end, talk, comparison of county head count, some general fund activities, and then a breakout of more detail of general fund balances. On page 3, fund balance, general fund balance increased by $1.5 million in 2018. At the end of the fiscal year, general fund had a total fund balance of $173.8 million, of which $146.6 million was unassigned. Looking at the governmental funds, which is all of our governmental activities combined, we had a reported combined ending fund balance of $747.5 million, which is an increase of $369.5 million from the prior year. The biggest driver of that increase in governmental was the issuance of the 2018 jail bonds. That was the number one item that pushed fund balance up in 2018 for governmental funds. Governmental fund balance, non-spendable fund balances total $12.7 million. Non-spendable fund balance is that which we cannot easily convert for payment of other resources. So these would include things like inventory. If we've got a nurse that needs a paycheck, we can't pay them with office supplies.
I was just going to ask him about.
I'm sorry.
So there's a question?
Yeah, there's a question, and I'm sorry I didn't notice it quick enough. Commissioner Webb?
Thank you. Yeah, you just said that, and the second bullet under fund balance, you said at the end of the fiscal year, the general fund balance was 173.8, of which 146.6 million was unassigned.
Yes.
So that's 27.2 million that was assigned. Is it a quick, easy answer as to how?
That's a combination of assigned and restricted. And there's a slide that actually deals with general fund balance that we'll get to later.
Okay.
That has a bit more detail.
Okay. I just wanted to know what happened to the 27.2.
Thank you.
Thank you.
Restricted fund balances. The county has a number of third-party restrictions depending on the activities that we're involved in, generally driven by the source of a revenue. If it's a grant, if it's a public act that specifies a use of certain funds, those kinds of things. So of the total restricted governmental funds fund balance, just shy of $400 million is related to capital projects and improvements. That includes the CJC, the Criminal Justice Complex, but that also includes other construction funds. Roads had $100 million of restricted, so that would be predominantly Act 51 money, almost exclusively Act 51 money. Debt service, we had $22.6 million. A lot of our debt service agreements require us to put money aside specifically for debt service, and so that becomes a restriction. We had $9.5 million of restricted for inpatient hospitalization. We had $32.8 million of special revenue fund. So some of our special revenue funds, the source of the funds by themselves specify that money can only be used for a purpose. Things like parks, right? We can't use parks millage money for something other than parks. And so all these constitute restrictions. Unassigned fund balances totaled $144.3 million. If you would like to see more detailed numbers in the CAFR, page 106 actually has a more breakdown of the different pieces for governmental funds, fund balances. Moving on to slide 5, looking at significant fluctuations from the prior year. So from 2017 to 2018, obviously the county has gone through some changes, And so that's reflected in our financial statements. So a couple of key points here. One, property tax revenues increased by $12.9 million. I believe this is our third year in a row of where we've seen our property tax revenues increase. Local grants and contracts decreased by $10.8 million. That's really related to the sale of Temple back in 2017, so we did not have that sale in 2018, therefore revenues decreased. State sources of revenues decreased by $6.8 million from 2017. The big driver of that is the state's property tax, personal property tax reimbursement scheme that they have, where they capture a certain portion of sales tax revenues they're supposed to remit to us to offset our lost personal property taxes now that's being phased out. In 2017, we had about...
If I can interrupt
Sure.
you for a couple seconds. I got a couple of questions. It's almost like a showdown. Commissioner Coleman first, and then Commissioner Webb.
The third bullet.
Mhm.
I know that the state did take back that, well, you were able to tax inventory at one time. Then they passed some law that that no longer allowed the locals to do that. Am I correct?
I'm not familiar with that structure. Personal property tax would not generally include inventory. These are machine equipment,
Right.
Those kinds of things.
Yes.
And so if Company A buys a $500,000 CNC machine, they would have to pay personal property tax on that to the local.
locals, right.
To the local.
And then the state eliminated that, didn't they?
Yes. So when it's actually being phased out. It's not completely gone. We still get personal property taxes, but it's a declining amount.
But weren't they supposed to reimburse the locals for the lost revenue?
Including us, yes. And so what happened is in 2017, we received about $16 million in personal property tax reimbursement from the state of Michigan. Essentially, they were supposed to make us whole
Right.
for our decrease in personal property tax from the phase out.
Right.
In 2018, they gave us about $6.8 million less. What they did is they gave us a portion of it, and they deferred a portion of the payment. So as far as they're concerned, we're getting our whole $16 million, but we're not getting it in 2018. We get a portion of it in 2018. We'll get a portion of it this year. They're basically, to a certain extent, fixed their budget by pushing off our payment by a number of months.
No push them again.
Thankfully, it's a relatively small component of our revenue stream, but it does have an impact. When we budgeted, I'm trying to remember the exact number. In 2018, our original budget for PPT replacement from the state, I believe, was $14 or $15 million, and they shorted us to that budget line.
Okay, your question's answered. Commissioner Coleman?
Yes, it is.
Commissioner Webb,
So
point.
right to that same point, so I'm thinking the same way she is. So with that, when you say being personal property taxes were not being phased out, I guess are they trying to phase out what they reimburse us?
No.
I mean, I know they're stretching it out, it sounds like, our payments, and I don't know what schedule that happens on. But, so I remember having this conversation with Kevin Haney, and so if they were supposed to be reimbursing us like $16 million, like if that's what we paid and they were reimbursing us, then are you saying that they're going to stop reimbursing us?
No, what they did is they basically, because governmental accounting does not allow us to capture future revenues, only what we capture within 60 days of year end, this payment didn't come in until, I want to say March. It's either March or May. And so what it did is it basically pushed a portion of what we should have received last year into this year, which pushes a portion of what we would have received this year into the next year. And so they took, call it about $6 million that they basically pushed one future fiscal year out indefinitely.
So, but they're going to continue to, there's no laws that's been changed. The word phased out is what scared me.
The phase out is just of the personal property tax. So the personal property tax is being phased out. So that is where the locals get a piece of personal property that is owned by local commercial and industrial
So they're just going to capture it all at the state level?
There's no capture. What they're doing is they're phasing it out, so there will not be a personal
Collecting it?
property tax.
Right. I
And what
got
they're
you.
doing is,
Okay.
there will no longer be a personal property tax.
So they don't need to reimburse us because they're not taking it.
Well, they're reimbursing us for what we would have gotten,
revenue, yes.
but aren't getting.
Right.
So where we would have received, the county receives personal property tax, right? We get a piece of that. So City of Detroit gets a piece of that personal property tax, and we get a piece of it. It's the same millage that applies to commercial, industrial, and
So that's not going
real
away.
estate properties. That tax is going away.
Okay.
The state created a statewide authority. That statewide authority gets a certain amount of sales tax revenues. So when you pay your 6% sales tax, a portion of it now goes to the statewide authority. The statewide authority calculates the lost personal property tax to each governmental unit, and then they're supposed to reimburse us for that. What they did in 2018 is they took a portion of that reimbursement and deferred it into a future year. So essentially, in theory, on an infinity basis, we'll be made whole. But we're basically now, they carved out a chunk of the money to be kept at the authority level that we will get now 6 months later than we would have last year.
Okay, thank you.
Please
That's crap.
So,
Just follow up on that one.
Okay.
Just, okay. So when you say phase out, you mean that the locals did not, they didn't take the ability to capture the personal property tax from the local all at one time?
correct.
You meant that, when you say phase out, you meant that they still are able to do some of it?
Yes, so we're still capturing, the
Yes.
county is still
Right.
still getting personal property tax.
Right.
But
Right.
where we used to get $14 or $15 million a year, now I think it's about half of that, give or take. And so that's going away slowly. And the statewide authority is supposed to be making us whole. So they're supposed to be kicking in the difference plus. Because some of the personal property tax, it's not just the exact amount we were getting back in the day, but we also had exemptions that would disappear over time. And so in theory, our amount of personal property tax should have been going up. And so part of this reimbursement process is supposed to account for that. Ish.
I see a
Please.
screwing coming. Go
Please,
ahead.
please proceed. We got a few things to get through here.
Other things that changed noticeably, judicial expenditures, including Third Circuit Court, in front of the court and probate court, $6 million increase in judicial total expenditures. They had some projects that they did in 2018 that were budgeted for. They actually came in under budget, but we increased our budget substantially to do these projects. General government expenditures increased by $25.9 million. Most of that $25.9 million increase is we had an increase in the pension arc that we had to pay, so we had to cover that piece. And we also provided a supplemental payment to pension last year. There was also a correction of a $4.2 million issue on, and the prosecuting attorney had a $3.2 million increase.
To
Public
this point, Commissioner Kling.
Yeah, before you move to the next bullet, where are we at with the pension? I'm a little surprised. I thought we were paying the pension down and, or increasing our percent funded, and the ARC is still going up. So what's, first of all, where are we at with the pension? And what's the trajectory of future ARCs? What are we looking at?
So if we...
Just for in trends, not
Yep.
in actual numbers.
Yep. So 2017, 2018, if you'll remember, the pension system had what was probably described as a double declining amortization period. So every year, the calculation basis would drop by 2 years. So if you have a 20-year amortization, you say, I gotta make up all of my unfunded amount in 20 years. In the second year, instead of dividing it by 19, you're dividing it by 18, which increases the rate that you have to increase your payments dramatically.
Okay.
In 2018, the board changed that to a single-year declining, starting with a 16-year
Yeah.
basis
Yeah, that-
for the current year.
That caused a
which-
lot of discussion, but
Yes. And so what happens now is we will probably still see increases because a single-year declining basis of an ARC still includes components that change over time. and so it's not at all unrealistic for the ARC to go up, could go down. We have a bang-up year in the market, and the pension system has, significant gains in asset values. That gets smoothed into the ARC over time, and so the ARC would drop maybe a little bit. If we had a particularly bad year, it would maybe put some upward pressure on it over time as one factor, and there are many factors. Changes in assumptions, a whole bunch of other things. So every year we
probably they'll be going
recalculate.
up still, probably.
It very likely, my personal view of the pension ARC is it'll probably increase, but it'll increase at a much more moderate pace.
Okay. What's the percent funded these days?
I believe it's 60 or 61% funded. So if we look on,
Okay.
Well, you're looking it up to that
Yeah.
point.
Thank you,
Mr.
Mr.
Abel?
Chair. That's-
Actually, Matthew, the number is 62%, which is
62%?
62%, which is really significant because based on the state's new laws regarding pensions, when you are above 60%, it precludes state involvement in evaluating your pension. And Matthew's right; it's over 16 years now. Just moderate increases in the ARC because it's funded based on an increase in payroll, so there's going to be some moderate increases. But 62%, which is really good over 16 years. And last year, because of the money that came in from DUOs, the funding by the general fund was about $97 million, which is rather dramatic.
A lot better than what, 48 was our low point?
45.
Yeah, and this year, I believe the ARC payment's going to be about $56 million. So it's going to be more constant and steady than it had been in the past because of the double-digit decline that Matthew was referencing.
Okay. Thank you, Mr. Chair.
Please proceed, Matt.
so to your question, 61.74%. It's pages 118, 119 in the CAFR. Our total contribution, not including employees, but the county's contributions, including the sewer system sales, everything else, everything we put into the system was just shy of $140 million, which is quite substantially more than the ARC was. The ARC last year, I think, was less than 60. And so we kicked in about 140, so about $80 million more, $81 million above the ARC was put into the system last year.
Thank you.
Public safety expenditures increased by $5.8 million. Some of that was related to jail operations, but also increases to pension and general operations. Transfers in decreased by $9.7 million. The driver of that is the declining delinquent tax revolving fund transfers. That's been declining pretty much consistently every year. We anticipate another decline this year, although not as big of a decline, but still another decline this year, probably another slight decline next year. Fortunately for the folks in Wayne County, that means that there's just fewer foreclosures. To the county's operations, that means less surplus from the program and therefore a decrease in revenue. Hopefully we're making up most of that in increased property taxes, but they're not directly tied together, obviously. Transfers out significantly changed from the prior year. It increased by just shy of $30 million. Most of that was what we sent over to the Criminal Justice Center. We funded the Criminal Justice Center about $30.6 million in 2018. We obviously did not have that in 2017, so that was the driver of the change in transfers out. A few more significant events. Some of the first three here, we're talking about changes from the original 2018 budget that would have been adopted in August or September of 2017 to the final amended budget that the Commission approved. Property tax revenues, we increased them $8.4 million during fiscal year 2018 from the original to the final amended budget. Non-departmental expenditures for retirement increased by $10 million. So this is where we increased we essentially kicked in $10 million of county money into the pension system. And so we had a budget adjustment for that. Transfers out, I talked about, we increased by $36.8 million over the year. Most of that went to the CJC. Continuing on to page 8. These are significant budget to actual variances. So our final property tax revenues actually exceeded our budget by $11.2 million last year. One of the challenges with property tax revenue accounting is we get the bulk of our property taxes in September, October, November. And so by that point, we really aren't, doing budget adjustments to property tax revenues. So governmental entities that have different fiscal years may have an easier time with property tax revenue accounting and budgeting because they may have already captured the revenues, and so they can basically calculate backwards. If I've gotten $100 million, I'm probably going to get $100 million. It's much easier to budget that way. After the fact, budgeting is easier. The timing for us, we capture at year end and actually after year end. Generally, October, November, we're good for $30 to $40 million. It's about 10% of our total. And so we, Kevin, through the budget process, we estimate what our ending amount is, and we certify additional revenues where we think we're going to capture them. Fortunately, last year we actually came in above that within the property tax revenues. That $11.2 million property tax above budget amount offset many of the other revenue lines, which actually came in just slightly below budget. And so our total budget for revenues really wasn't very far off. But category to category, there was some, as Kevin would say, north to south variances.
Mr. Chair?
Yes.
I just need a little help on that last one. On this slide, you say expenditures below budget, notably judicial by $8.7 million. And a couple of slides back, you told me judicial expenditures increased by $6 million from the previous year. Can you just quickly reconcile that for me?
Absolutely. So
Cognitive dissonance has set in.
So the total budget was actually increased by about $14 million for their projects, but they only increased their actual expenditures by about half of that. And so the 8.7 is what they were given as budget for projects that they did not spend.
Spending
and so
is
they
still
came
up,
in
but
under
they
budget.
didn't come in, yeah.
Correct.
Are we going to expect that they're going to expend that in the current year?
I don't know the judicial
Okay.
budget
All right.
well enough to be able to tell you budget to actual year to date. I think
Gotcha.
Kevin provides a report periodically on budget to actuals.
Thank you, Mr. Chair.
If we move on to slide 9, breaking out the judicial, so we
Yeah,
talked
there
about
it
them being 8.7 under. The circuit court and the front of the court, respectively, $5.6 and $3.2 million. So the two big court operations both came in under budget. General government overall was $24.9 million under budget. Specifically, county clerk, management and budget, county executive, prosecuting attorney, register of deeds, county treasurer, and non-departmental. Those are some of the bigger ones that had variances, and all of them to the good.
Well, not necessarily, if I may jump in on that one. You know, we have 171 open recs for sheriff. We have less, for example, auditors than we had a few years ago. They used to have, 17 or something? Now they got 8. It takes us, I found this out yesterday working with the sheriffs on an item that'll come up today. They have a contract that's in front of us as a result of 2 years ago to try to get, it's been 2 years to get an item in front of this commission. And it's like when you start seeing stuff like that, we're understaffed when it comes to the commission, when it comes to all sorts of folks, and including yourself. You know, no kidding aside, I absolutely appreciate the work you do, but if you get sick, it hurts the whole county. You know, I mean, you're valuable more than you certainly realize. You know, but you're valuable. I mean, there's a lot of people that are college educated. We lost when they increased the insurance for county employees. They left in droves, and so it might be good on the numbers wise, but to get this county back up and functioning again, we spent a lot of money on technology. We need to do what we need to do to get employees back here to get us to a level of service. So I appreciate the numbers, but we've got to do something to get the county functioning at a better level. So that's just my thoughts, and I don't know if you agree or don't agree, but
I would love to have more folks in my shop.
That's for the record, too. We got you recorded, so thank you.
There's a number of items within management budget, and I'm sure every department and every office elected officials feels the same way, that there's work that we would like to do that we don't have the capacity to do. We've talked about getting the CAFR done by the January 31st charter deadline. That would require a whole lot of extra hands within the county, not just management budget, but across the county to make that happen. It's a countywide effort to roll up $1.1 billion worth of transactions and to square everything up for year end. And so there's absolutely, when I said to the good, meaning just a favorable variance, we budgeted more than we end up spending. Some of that is related to open positions within management budget. That's a big driver for us. We've had some positions that we've had a hard time hiring. Probably partially compensation, partially benefits. A big driver is we get folks applying for the job, but they don't have the necessary experience, and we don't have the training curriculum to make up the difference. Training within Wayne County predominantly went away years and years ago. We lost our training division within PHR. If memory serves, I think it was 2012 or 2013-ish. And so a lot of our folks are not getting, we don't have a good training curriculum to bring somebody in who has 70% of the skills we need and then training them on the rest. I can't bring in someone who is an accountant at General Motors and teach them governmental accounting. And so where we've been able to source folks maybe in the past, be able to do that, we can't do it today. And
How
so
do we
we
get
rely
there?
on.
But
We're trying to build. We are working towards building training. DOIT has a digital training platform that they've been rolling out. We've used it for internal training so far. That's helped us internally. We've rolled it out for some Excel training, and we've had some good success with that. Some of the more specific training requirements we'll have to build ourselves, but we can push them through the platform to make them available. That will help. That will help especially our folks that are in-house now, where we can train them and add skills. One of the big challenges is governmental accounting is not taught at the college level substantially in most colleges and universities. When I took governmental accounting, it was one semester, and only half of the semester was government. The other half was nonprofits, which doesn't apply to us. And so most fresh college graduates cannot go work for a government and be successful. They just don't know the basics. And so where you learn the traditional path for learning governmental accounting is you go work for a firm that does governmental audits, and through the governmental auditing process, you learn governmental auditing. So when Plant Moran brings in their fresh from college youngsters who don't know governmental accounting, and we have to explain how certain things work through the audit process, we're basically training the next generation of governmental accountants when we do that. Unfortunately, that's where our time is spent, is training the outside auditors staff instead of training external folks to become county employees.
Well, to that point, Commissioner Webb?
Thank you, Mr. Chair. Just quickly, I think that if they improved benefit packages to offer employees, that you'd be able to attract a better caliber of people, maybe people with that experience from other government entities, and not just in your department, but across the county. I'm glad to see, to our chair's point, the revenue's all going up and the numbers looking good, but operationally, as far as delivering services to constituents, I've never had a harder time getting things done around here, ever. And it's because we don't have people, and 623 unfunded positions because we're not giving them the insurance that they need and the compensation that they need to attract quality people. So I'm hoping that the administration sees this, and after year after year after year after increased revenues coming in because of the good economy, that they will utilize some of that funding in this budget to offer more comparable. We got a 3% unemployment rate. It's competitive out there. It's an employer's market. An employee's market. So we need to be competitive, and so we can attract people to our Auditor General's office and to your office. So I'm hoping that in the budget that's going to be proposed, that we will see that, so that we can start delivering services to our constituents and our taxpayers like we should. Thank you.
Okay, moving right along.
Are we going to be able to get through this today?
I'm trying.
Yeah, we'll get through
I will speed up so we can get through it.
Okay. Well, I'll just call you with any questions.
Debt, total bonded debt for the county, $851.5 million. Our cap by state statute is $4.8 billion, so we are well under our cap. Most of that, 92.6%, is full faith and credit or general obligation bonds. So our ability to tax Wayne County residents and businesses is how we secure those bonds. Total bonded debt for the county across all operations, including the sewer system singular, it increased $151.4 million. So although we issued $325 million worth of jail bonds, $223 million worth of jail bonds, our total debt only went up 151 because we paid off a lot of those sewer system bonds when we sold them. Credit ratings. So I'm actually working on the presentation to the credit rating agencies right now. As of September, and they have not changed since September, we had credit ratings in the investment grade. So that was, last year we got there, and so obviously we want to work very, very hard to maintain that status, if not, actually maybe get a notch or two increase this year. 2019 expectations, as I stated earlier, I'm going to kind of skip through this because this is really budget driven, but probably the only highlight is on page 11. I talked about the DTRF for 2019. The 2018 to 2019, we're seeing about a $5 or $6 million anticipated decrease in the DTRF transfer. And so that's still going down. We think from old conversations I had with the Treasurer's Office, and some historical information, we'll probably bottom out potentially in the 10 to 15 range. There'll always be some foreclosures, so we may be seeing that drop a little bit more slowly over the next few years, assuming the economy stays in its current growth cycle. Skipping a few pages, if we go to page 13, and so this is shifting back to governmental. So we talked quite a bit about general fund. Oftentimes when we think about Wayne County, but governmental activities really reflects the county as a whole. And so here we're looking at where we spend our money in terms of big picture. So general government operations makes up 23%, judicial 17%, public safety 14%, highway, streets, and bridges 14%, and health and welfare 23%. Those five big buckets make up 91% of all our spending. And so and a lot of that is within general fund. Big chunks of it are not. So when we think about, let's say, highway, streets, and bridges, that's the roads fund. They're a pretty big part of the picture. They're just not part of the general fund. So that's a good highlight. Next page, when we look at where do we get our money for governmental activities, there's really three big sources. Charges for services, operating grants, and property taxes. Those three together make up 84% of all the revenues that the county gets to operate our business on a year-to-year basis. And if you'll notice, I took to heart what Commissioner Colleen and I think Commissioner Hayes asked me last year. They now have dollars and percentages for every one of these.
Thank you.
Commissioner Webb had talked about a head count, and so slide 15 gives us a comparison of 2018 budget FTEs, actual folks here within Wayne County, and what that variance is. It's a little bit odd in a way. 2017 to 2018, our total open vacancies did not change. We had 623 open vacancies in 2017 and 623 in 2018. So hopefully we've now hit the trough. We're at the bottom, and hopefully things we'll be seeing that number drop substantially over the next few years. The budgeted FTEs from 2018 to 2019 increased slightly, and that would have been seen through the budgetary process from last fall, last summer. Slide 16, I included this. This is a general fund kind of summarized, we talked about property taxes, but here you can see the more exact numbers. We can see the federal grants and state grants. Actually had increases in both of those, which is great. When I talked about the PPT, the personal property tax difference, we can see that in the state sources line going from 16.6 to 9.9 million. That's where we're seeing that where they've pushed off a portion of our revenues. We talked about the decrease in transfers in being led by the DTRF. You can see that in the transfers in line. The transfers out, where I talked about what went to the CJC, that 30+ million increase is shown in that transfers out line. And so we can see from 2017, where we had a $64.2 million annual surplus in 2017, in 2018 we had a $1.5 million surplus. Page 17 gives us a little bit of historical on fund balances. So we talked about things like, and this is just for the general fund, keeping it at that more narrow focus. We look at non-spendable. We talked about that a little bit. What's restricted within general fund? What's assigned within the general fund? So if you look at both of those, restricted was increasing every year, and now we've had a good-sized decrease. That's where we're able to use restricted funds for the CJC, and so we're able to use money that we've had a hard time using, and now it's got a good purpose in there. Same thing with assigned. We were able to use a chunk of our assigned fund balance, which had been increasing for a number of years, towards the CJC, and so we're able to use those less easy to use pots of money for the CJC, leaving us some unrestricted, unassigned money that we may be able to tap into future years. If we have another recession, that unassigned money becomes very important to us because we can use that to pay for whatever versus only being able to use it for a very, very specific purpose, which we may not need at that point in time. So although the fund balance did not increase very much, just $1.5 million, the shift in unassigned is helpful to us in those future periods. I think I got it in just under the wire. 5 minutes to spare.
Commissioner Kleen.
Thank you, Mr. Chair. I've got a question, then I have a motion to make.
Okay.
But we've got 4.5 minutes.
Yeah.
You gave us property tax revenues on the slide on page 16, and we went from 284 mil to 296 million. Here's what I'm trying to get a little bit of a handle on. That's like a 4% increase. Is that just pure property taxes, nothing else?
So it's a little bit, it's a number of things. So personal.
Okay, well, I don't want to.
This is property tax, but it also includes things like in 2018, the Michigan Tax Tribunal, we had a little bit fewer reimbursements than we had budgeted.
And that's in the 296.
So that's part of that 296.
Okay. And this is what I'm trying to get at, right? Proposal A.
Mm-hmm.
Doesn't matter what the housing market does, we're capped at the consumer price index or the 5%, whichever is less.
Lower, yeah.
So what's the rule of thumb that I can think of as a public official? If I get, like, for every 1%, if the CPI is 1% or 3%, for every additional 1% that we get up to 5%, about how much is that worth it to us in revenue? A 1% increase would be just pure property tax.
Because it's the lower of the actual increase or the CPI, there's not a hard connection that you can say, well, CPI is up 2%, so we know we're going to see X increase.
Yeah.
That's not just driven by the CPI.
So there's not a rule of thumb to go by.
There's not. And actually, oddly enough, when we look at, probably during the budget season, you'll see this, the 2020 property taxes are going to increase at higher than CPI. And the reason for that is that because Detroit and Hamtramck have done a complete reassessment of a significant class of properties, and so that is not directly impacted by the constitutional limit. And so in this instance, Detroit and Hamtramck saw very significant increases in tax.
I don't want to get too weedy here, but I would like to see if you do have, maybe in the budget process, if you have gone 10 years out to estimate, this scenario, that scenario, roughly where we're going to be.
And Mr. Abbo has a comment.
I just actually had a question, but for Mr. Kleen, we have $40 billion of real property value, so you can kind of do the math on increases in property values.
40 billion? Okay.
40 billion. But Matthew, you mentioned that you're working putting together a presentation for the rating agencies.
Mm-hmm.
And so I'm assuming that you're going to be refinancing some bonds? Is that the old jail bonds? And I know that the Guardian Building and First Street comes up.
So there's a contract, I believe, that has not yet gotten to Commission Q, at least when I checked it yesterday, for Acacia Financial. They are going to be the county's new financial advisor. We issued an RFP last year for a new financial advisory firm. Hilltop's contract, if you remember, was extended for not 6 months or 9 months as we finalized the RFP and got a contract in place. So part of Acacia's role is going to be to put together a game plan for all of the county's debts that are callable now and will be callable in the future to see what we want to refinance, if we want to have some payoffs. There's a couple of them that have relatively small balances, so we may want to consider a payoff just to save the interest in whole. Some of them may be bundleable, so we may be able to do one refunding that takes care of multiple bonds, and then some of them will have to be refunded individually just because of the nature of those. So the 2010 jail bonds, I believe, are callable at the end of this year. I think in November and December, if memory serves, I think.
Next year.
Or next year. And so there's, no, I'm sorry, it's the Guardian Building bonds that are refundable this year. And it's jail is next year. And so part of that process is we're going to be looking at everything that's callable today and what's callable out in the next couple of years and start putting together an issuance timeline of what we want to do with all the different pieces. There's lots of different options that we have to consider, whether we spread out some of the bonds to increase length of bonds, to drop payments, to try and get, keep debt service as level as possible. Rates right now are very attractive. They're probably going to stay attractive. The Fed's looking at possibly decreasing rates some more this year. And so we're probably in about as good of a position as we're going to be. The big drive right now, what I'm working on probably the rest of this week, and we start meeting with rating agencies next week, is finalizing the presentation so we can try and get the best ratings we can to save ourselves as much interest as possible. Right now, ratings increases, because rates are so low, have relatively minor changes, but some of our bonds have relatively high rates. So we should see some pretty good savings. I've seen analyses in the $25 to $30 million range for savings over the next 20 to 30 years. And so we want to capture those, but I want to make sure that we're not capturing a short-term savings while we're costing ourselves a pain later because we restructure them in such a way that maybe it saves us interest, but now we've done something where we're paying on bonds for a facility we don't own anymore, right? So why pay? You don't want to be paying for a car loan 10 years after you've sold the car.
We got to roll with this.
Very good, Matthew. Thank you.
I'd like to move items C1, 2, and 3 to receive and file and forward to the full commission.
We have a motion and a support. Any further discussion? All those in favor?
Aye.
Aye. All those opposed? Ayes have it. Next item, Mr. Clerk.
Next item E, such other matters as may be properly submitted before the committee.
Ms. Cora?
Just real quickly, though, I wanted to commend Matthew, Yogi, Shantika, and Michael Bridges for the job they did of getting the CAFR out behind the March 1st deadline, considering the short staff that they do have. I think they did a great job.
Thank you.
A year faster than last year. We're making forward
Moving right
progress.
Next item E, F, public comments.
Is there anybody from the public like to comment? Brian, you got any comments? Anybody from the public like to comment? Okay, next item, Mr. Clerk.
Item G, adjournment.
It's a motion to adjourn. So moved. Been moved and supported. Any discussion? All those in favor?
Aye.
Aye. All those opposed? Ayes have it. We are adjourned. Thank you.
Thank you, Matthew.
Kicking the can down the road might not be governmental accounting practices, but it is legislative practices and executive.
Yeah, and it's not good.
Yeah. The whole can kicking thing.
Yeah, so thank God we have a few people left like you that are really, that do what you do, and you're not politically, motivated, so thank you. I wish we had 10 more.
It's definitely, because when I see him slowing down that,
You're on a short list.
that personal property tax payment,
How sad is that?
I know.
you know,
Yeah, he's a straight.
the governor has
Yeah, and it's so
taken
refreshing.
Rick Snyder's study
Dan from the
on
land
what
bank
we
is
need
another
for
guy.
roads. Rick Snyder, 2.4 billion, 10 years, every year for 10 years, right? She came up with how to pay for that. The shit hit the fan everywhere. Everybody's like, nobody has come up with anything close to hitting Rick Snyder's number every year for 10 years, right? So now they're scrambling in the budget, right? I see all sorts of crazy stuff. Oh, the marijuana tax, right? Okay, that's estimated at 10 million a year. Now you got 2.39999 to go.
That's a joke.
But I see things like slowing down the reimbursements on the personal property tax is another way that they're
Scamming.
in there trying to hoard their little dollars.
Yep.
You know, when they
I think
passed
they did
the recreational marijuana act, it actually eliminated the 3%. I mean, it eliminated the 10%. So it's really a mess.
Yeah,
Yeah.
right.
They don't pay it anyway. They grow it legally and
Well,
sell it
and then,
illegally.
you know, hopefully this process, people are going to have to be a little honest because the 2015 effort at funding the roads, 2015, 17,
That's right.
everybody knew that was a scam right from the
They
beginning.
got couriers and everything.
Press didn't
I
want to
saw
deal
that.
with it, you know.
They did great.
And, you know, people, oh, I thought we fixed it. No, people knew right from the start that that was a bunch of BS, right? And so hopefully there's a little more accountability this time for
Because I know, you're at that point.
real numbers, real studies, real revenue,
That's why I ask.
hopefully.
Yeah, it's a tough
But
part.
yeah, they're
It
going
was
to be
just my mom.
rob. Well, of course, this is what we do, right? Rob Peter to pay Paul, and the state's up the creek like we are up the creek, and unfortunately, to a large extent, they're our taps. When they fool with them,
Yeah, we're so limited going outside from other new revenue sources.
yeah. But that reimbursement on property tax or personal property tax, that's not related to revenue sharing, is it? Different,
Completely separate.
different thing, yeah.
Both legislatively dependent, just two different pieces of
Yeah.
legislation.
Oh, I know.
So
They
I
do
think
snow
that
on, they
statewide
take
authority,
their
I think they
meds,
basically
they
use
leave
that
the
as
water
a quick
running,
fund
they do,
balance.
you know.
Because they were paying out 100% of what they had.
Right.
So they had
Yeah, I
to
have
fund
two older
balance. I think
brothers.
that's basically
One
why
of them
by
lives in
pushing
Kentucky,
all that payment.
so he's an
What
hour
they
from
give
health.
them
One of them
is
lives around
their
the
fiscal
block
year,
from
not
them.
based on what
He is,
it's
and
really
he's retired.
But we have, because they haven't paid it, they're going to turn on their books as.
Hey, every time I see,
He's got a son in the Navy in Virginia.
you know, there's this one unified court theory
Get it out of your system.
that the Michigan Supreme Court puts out there, right? That it's one unified court going all the way down the chain, appeals, circuit. Pay for your own goddamn courts then.
Yeah.
One unified court, it's the state's court, it's not ours.
If you're going to pay for it,
He always
All right.
if you're going to pay for it to the state, have a statewide property tax. You have one mill statewide, my son is forcing, they can figure out how to administer it.
Oh,
They don't have enough money, and they got to go to the voters to raise that tax rate.
oh, because you
But
can't.
that should be on us, they raise our tax rate, they can't fund the court.
Yeah, but there's no way we should be paying for the state's courts. I mean,
But,
I know why.
but I should
We do, but
Right. Yeah.
Thank you. It's just tough.
economic development.
I
No,
don't make sure
public
that that's not
safety.
how it
Oh,
And then
yeah. Okay, I knew I had another one coming my way. It's come up.
Yeah. Go box. Yeah, well, me too. If we got a minute, and I'm gonna be back in. Thanks for your questions. They were good. And what I was saying is, that change of the amortization schedule was something that I know you were influential in. It was a real win for us. Are we all here today? You know what I mean? How about Martha?
I said hi to her a
That's
couple
good to
minutes
hear.
ago.
That's right, stay healthy.
Yeah, I said hi to Commissioner Scott a couple minutes ago. Commissioner Webb is here. Commissioner,
How about McCormick?
I haven't seen her yet.
Could never have
I also
continued.
oh, she's here? Okay.
Yeah.
Okay, but yeah, and Commissioner Scott I just saw like 2 minutes ago before we talked. Just before we went down to your office. So,
How are you?
Good to see you.
papers
Did I
with
ask
these
for it?
committees.
Thank you so much. I'll take a look.
All the programs.
Stuff that was, oh, wonderful. Wonderful. And
And I trust you and what it was, but I just need to be able to speak to it specifically, so thank you so much.
Commissioner Webb isn't on yesterday, so Commissioner Mayhew is here.
Fighting a good fight.
McCormick is
How you
always
doing,
right.
Mike Turner? I always love you. Know that.
You have a funny way of showing it sometimes.
Hey, you know, I just need the information. I just need the information, and you know what? When I was a lobbyist, okay. So when I was a lobbyist, the
I'm gonna get started.
used to tell me, help me justify my vote. You justify, so you gotta justify. You do.
No problem.
Good morning.
Good morning.
The Committee on Public Safety. It was on, wasn't it? Okay. Good morning. The Committee on Public Safety, Judiciary, and Homeland Security will please come to order.
Commissioner Baker McCormick, Commissioner Baydoun.
Here.
Commissioner Basham. Here. Commissioner Scott.
Present.
Commissioner Clark Coleman.
Here.
Chairwoman, you have a quorum present.
Thank you.
Next item, approval of the May 22nd, 2019 minutes.
Okay.
Support.
Been properly moved and supported, moved by Commissioner Scott and supported by Commissioner Baydoun. Are there questions on the motion? Hearing none, all those in favor, please indicate by saying aye.
Aye.
Those opposed, the motion carries. Sir Clerk?
Next item C, one unfinished business, approval of a fleet maintenance services contract with 2 one-year options to renew with Metro Tech Automotive LLC.
Okay, can we have folks from the Sheriff's Department please come forward? So I see we have Sir Michael Turner here today to come with all the answers to our questions.
Good morning.
Good morning, Sumaya Harb, Director of Administration of the Sheriff's Office.
Good morning.
Michael Turner, Chief of Staff, Wayne County Sheriff's Office.
Lieutenant Gloucester, Field Operations, Wayne County Sheriff's Office.
Okay, you want to get started?
Yes.
Who?
We also have Director of Procurement.
Good morning, Aaron Wagner, Procurement
Okay.
Director.
Thank you. Thank you for being here.
Good morning again. This is a new contract